Thank you to everybody joining us today. I am Andy Bierman, Park City's mayor, and we have a number of guest panelists here, which I'll introduce in just a moment. But we are now nearly 3 weeks into the shutdown of our resort economy as we deal with this COVID-19 crisis. We basically closed our resorts, told our guests to go home, and told our residents to stay in their homes. And after 3 weeks, I think we're just beginning to adjust to this new strange reality, and it's hitting us all hard. I want to thank the community first and foremost for their sacrifice and their discipline going along with this stay-at-home order. Early signs are that the social distancing is helping. That we are having fewer cases. They are still on the rise, but we are slowing the spread, and there is hope that we won't overwhelm our healthcare system, which has been the large point of the immediate crackdown. But this has cost us all dearly, and there's probably no one that it's cost more than our small businesses and our service workers in town, that in the middle of their peak season, they were suddenly told to go home. There's been a tremendous amount of anxiety over this, and up front, we struggled to address that because we were focused on health and human safety. But at this point, we are stabilizing. That doesn't mean we're easing off, but it's giving us time to look forward towards those in need and what the recovery phase might look like. So last Friday, we had a session like this, and there were a lot of specific questions, what was going on the federal and the state level. Fortunately, today we have some answers. And so we have brought in some folks to help. And we have, I'm going to introduce our panelists now. We have Jim Porter here. Jim is the trade service manager at the World Trade Center, Utah, and he's going to be able to talk about the Federal CARES Act. We also have Bill Malone, the CEO of the Park State Chamber, Max Doilney, Park State Councilmember, and Jonathan Weidenhamer, who is the Economic Development Manager for Park City. They can all talk about the local efforts, what our Business Resilience Task Force is doing, as well as maybe help us out discussing what's available by GoEd. We do have Ben Hart from GoEd that we've invited. He hasn't joined us yet, but he may be a late addition. So hello, folks.
Oh, here we go. Good morning, Andy.
Jim, since you're our special guest here today, can you just start out with a little bit of an overview on the CARES Act, what it's about, and what potential's in there to help our small businesses?
Absolutely. You may wonder why World Trade Center Utah is even here at all, given that we're kind of international and our work has been pretty well shut down. You may know we're the international business arm of the state. We're here to help Utah companies to export. We bring in investment from overseas, but we're also serving on the governor's economic response task force. And so we've pivoted, I think, from the work that we typically do to support Utah companies right here at home, particularly to get to take advantage of federal resources. And so that's why Andy's invited me here today. So let me talk a little bit about the CARES Act. I'll give a brief overview. I can also get a lot more in depth on the Paycheck Protection Program, which we'll be talking about here in a minute, and welcome questions regarding that program or the disaster loan. So please have your questions ready. The CARES Act, as you've probably heard by now, is a $2.2 trillion aid package from Congress that is meant to provide emergency economic assistance and also to improve the healthcare response across the United States. There's a few different buckets that funding falls into, and I'll spend the most time on the small business buckets. But just for your information, there's $340 billion specifically going to the healthcare response. That's money that's going to hospitals, healthcare systems, state emergency management, and other places to help improve testing, make sure that testing is free for anyone who gets it, and ensures that we can move rapidly and that healthcare responders have the equipment that they need in order to safely provide the necessary services that they're providing. Additionally, there's $150 billion that's being spread pro rata to all the states. That means that Utah's getting about $1.5 billion to help stabilize the budget or to pay for other kind of emergency needs. I'm not going to spend a whole lot of time on that because what we really need to talk about is what's available for small businesses and nonprofits in Park City. So if you are a small business or a nonprofit and you have less than 500 employees, you should perk up a little bit. because the Paycheck Protection Program, which I'm sure you've heard about now, is rolling out today. Brief preview of that program. There's $349 billion of guaranteed funding through the SBA for small businesses with less than 500 employees. In some cases, some businesses in hospitality and food services can have more than 500 employees, so long as there are more than 500 employees in a single location. So if you have questions on that, please talk to me. But the eligibility standard there is very generous. So like I said, anyone with less than 500 employees should be paying attention. You'll be able to apply for a loan of up to 2.5 times your monthly average payroll for the last year. That's capped at $10 billion, or $10 billion. That's capped at $10 million, excuse me, and can be really helpful over the next 8 weeks or so. One of the really valuable pieces of this program is that if you spend the money on the eligible expenses that are detailed in the program, that's payroll costs, which includes retirement benefits, health benefits, wages, commissions, but does not include the money you spend on independent contractors, and does not include owner's draw. You should know that you can get 2.5 times your monthly payroll, except for those expenses. In any case, if you spend the funds on the appropriate expenses, the funds that you spend within the first 8 weeks will be forgiven. So there's a loan forgiveness aspect here at the very end that'll make this very easy for small businesses to swallow. Additionally, again, if you're a nonprofit, a 501c3 or a 501c19, this program is available for you as well. I'm sorry, if you're a 501c6, you should look at the disaster loans as an alternative source of emergency funding rather than the PPP. So know that. But the Paycheck Protection Program isn't everything that's going on. There are a number of additional provisions. For example, anyone with an SBA issued loan right now that was issued before the bill. So before what was that, March 17th, will have principal, interest, and fees covered by the SBA for the next 6 months. Additionally, if you've applied for an economic injury disaster loan and you haven't seen anything yet, you can also apply for a grant, a $10,000 grant to be sent to you within the next 3 days or so of applying. That will help you get cash early. And that grant it does not have to be repaid. Additionally, for small businesses and self-employed individuals, you have received a tax deferment through the CARES Act. So your tax payments that were due here in 2020 now will be due half on December 31st, 2021, and half on December 31st, 2022. So you have a couple of years to make those payments. Additionally, the Act brings a lot more funding to the local SBDCs, your Women in Business Centers, and the Minority Business Development Agency. So if you have relationships there, then please reach out to those folks. They'll have more assistance, more bandwidth to help you. Additionally, if you don't have a relationship there, I suggest you build one right away with your local small business development center. For large businesses, there's also provisions in the bill through the Federal Reserve. There'll be $454 billion in loans and loan guarantees for eligible businesses. I'm not going to take a lot of time here because most of the people we talk to tend to be small businesses and nonprofits, but know if you're a large business that there's also loans and loan guarantees available. Finally, for the last bucket of funding through the CARES Act is resources for all Americans. That includes the recovery rebates, which will provide a check for every adult at $1,200 and every child at $500 for those making $75,000 or less individually or $150,000 or less jointly. If you make more than that, there's
Hey, Jim?
Yes, go ahead.
Just to interrupt for a second, I wanted to let everybody know it appears there's been some problems with hacking going on with these Zooms, and it does appear we've been hacked. So there are some lewd comments going on. I would just encourage everybody to ignore those and focus on Jim.
You know, I'm surprised how much attention gets put towards these webinars. You know, it's just like, anyway, it's pretty funny. In any case,
sorry for the distraction.
Yeah, just ignore the chat, I guess. In any case, if you make less than $99,000 individually or $198,000 jointly, there'll still be a check coming in the mail for you, but that will be phased out. If you make more than $99,000 individually or $198,000 collectively, then you won't be getting a check in the mail. There's also been upgrades to the unemployment insurance offered through the states. For states that agree to it, there'll be some additional provisions. First and foremost, those employment benefits will be increased by $600 per week. Individuals that have already exhausted their unemployment benefits can come back and potentially get more. Additionally, those people who are on unemployment insurance right now can get an extra 13 weeks of benefits. Finally, the last piece of this act that's available for all Americans is the retirement fund flexibility portion of this. If you can withdraw up to $100,000 out of your retirement accounts without penalty if you're using the funds for coronavirus related purposes. You can also borrow up to $100,000 from a qualifier employment retirement plan within 180 days. If you have outstanding loans from your employer retirement plan, you may delay payment 1 year without penalty. So that's the 5-minute, 30,000 foot, 90-mile-per-hour overview. And I'll leave it there for you, Andy.
Okay, Jim, thank you very much. That was a great overview, and it sounds like there's some good opportunities for relief from the CARES Act. I've got a question for you, and I'm going to ask it now because it's relevant to what you just presented, but then I'm going to jump over to Ben Hart, who just joined us from GoEd, and make an introduction for him. So the question that came in, can businesses bring back furloughed employees after receiving the 7A loan and get benefits of forgiveness?
Yes, in fact, that's what the intent of the act is. If you fired employees, then you need to bring them back before June 30th to get the loan forgiveness. But you should also know in those forgiveness provisions, no more than 25% of the amount that's forgiven to any business will be for expenses outside of payroll during those 8 weeks that you can incur those expenses that are eligible for forgiveness. That means that 75% of 75% of what will be forgiven will need to be payroll expenses. So don't wait to rehire your employees until the last minute, because you'll find that reduces your forgiveness amount. The intent of the bill is to get people paid and to help businesses to manage their payroll without going belly up or having to close their doors. So I would say hire back those employees as soon as possible if you can. And if you do, you'll receive a larger forgiveness amount than if you wait to rehire them.
What about, Jim, I'm sorry, in addition to that question, what about back wages if they've been out of work for 2 or 3 weeks? Does that work, or do you just bump up their wage to sort of help them get back some of what they lost? Is there anything in there for that, or penalties for that?
There are no penalties for that. That's a decision that's up to you as an employer if you're going to pay back wages or not. The bill just wants you to get those employees rehired and paid again just as soon as possible. So there's no provisions relating to back pay that I've seen.
So Jim, one more drill down on that particular question. We're a very seasonal economy here. So if you take, let's take a restaurant, for example. In March, they may have 100 employees. By April, typically, they might take that down to 30 employees, go back up to 60 in July, and then back down to 30 in the fall, and 100 again in December. How are all those calculations going to come into play with these new loans or grants?
That's great. If you can demonstrate to your business, to your lender, who'll be the one making the loan, that you're a seasonal business, they can work with you on the average employment amount over the last 12 months. You can shift that timeline a little bit in order to better capture your needs. I'd say go talk to your lender about that one, because the specific lender is the person you'll work with to determine what that payroll amount's going to be. Whoever you have a lending relationship with, or any of the SBA approved lenders in the state if you don't have a relationship with an SBA approved lender. So there are provisions for that, and I would say talk to your lender about it.
Okay, that's great. That's great to hear there's some flexibility.
One more question for you, Jim, just because I might be in this situation as a business owner, and I'm curious if you front load or back load your payments to fit within that 8-week period. I'm just curious what kind of tracking is going to happen, because I could see managers doubling their salary for 2 months and then not getting paid for the 2 months after that in order to sort of maximize their potential for loan forgiveness. And I just want to make sure people are aware, like if there are speed bumps out there that they could trip over that will hurt them in November, which is going to be a big part of what our task force is talking about, is gearing up in November and being prepared for that starts now. So I'm curious about those speed bumps.
That's a great question. And I don't have the certification rules in front of me. We just got some great guidance from the SBA that I'll send you and anyone else who'd like it, who's on the call, that describes exactly what you're going to have to certify to the lender. But as part of that, they're going to look at your total payroll count and how you're paying all your employees. It's not, payroll costs is not a black box. They're very much interested that you're hiring back your employees. And so if you're just boosting your own salary and not hiring back anyone, you're not going to get any forgiveness at all, and you may actually get penalized.
Hey, Jim, if you get an opportunity and can put that link up in our chat room, then everybody can download it while they're listening today.
Do you want me to put it in the chat room, or do you just want me to tell you where to go?
I think we fixed the chat room, so.
Good. I will put it in the chat room right now.
Okay. So I'd like to introduce Ben Hart. And Ben is the Deputy Director of the Governor's Office of Economic Development. And we brought him in today to talk about SBA programs and the GoEd bridge loan program. So Ben, I was hoping you could briefly introduce yourself, maybe talk a little bit about what GoEd's working on right now. And then I think the question I'd like you to weave your way into is there's a number of products out there suddenly for businesses to go to that need immediate relief, and maybe give them some guidance where they should start and what might be the best fits, whether they want to look at the state programs, the federal programs, or both. So thank you.
Great questions, and hopefully everyone can hear me okay. But Mayor, first and foremost, thank you to you and for your efforts to put this together. I think it's forums like this that are really, really going to help people manage through this. And so thank you for your foresight and vision putting this together. We also have borrowed very generously from Park City for our board members over the years. And so we're very integrated into the Park City community, Chris Conaby and Mel Lavitt and a number of others who've been on our board. And so we are very appreciative to the Park City community and all that it does to help prop up our statewide economy and our community. So thank you to those who are on the line as well. I hope that I can provide something that will help you make it through these times. We know that now is a really difficult issue. As we did some early surveying and just trying to understand where the needs were, what the needs were, what we heard back loud and clear is that capital is desperately needed. And we've got to get it out onto the streets ASAP. And so the state over the last 2 weeks now has been designing a program that will help specifically small businesses. We have different guidelines than what the SBA will be. Now, I will just demarcate and disclaim that our program is going to be much, much different than the SBA. So World Trade Center has been an excellent partner for our office and for the state of Utah in terms of coming in and really helping to interface with the federal programs. Those federal programs is just looking at the chats, understanding the questions that are being asked, they're going to have some complications in terms of usability. They're a little bit more complicated, and we understand why, and we know why that is. And so Jim and his team and Miles Hansen at World Trade Center have done an excellent job just simplifying, trying to make it easy, putting together a good technical assistance team. And so thank you to them and all they're doing in all of this. Our program at GoEd is much, much more streamlined. And so what it focuses on is how do we get you money very, very quickly to make it through until you might be able to get some money from the SBA or from some of the other federal sources. And so our program is up and live now. If you have not been to either our website at business.utah.gov or to the state website at coronavirus.utah.gov, I would highly encourage you to. There's good resources there that can help you with the federal piece, that can plug you into our loan. I will say that if you want to get in on the GoEd program, you've got 2 hours and 38 minutes, if my math is correct. And so when we say we're trying to get this out quick, we mean we're trying to get this out quick. Now, that's just the first tranche. We'll have other tranches that become available, but our deadline is at 10 o'clock today. So if you have not applied for our loan and are interested, The deadline is in 2 hours and 38 minutes. I just want to put that out there in case anybody wants to start looking at that as well. So our program is layerable, meaning that if you want to go for SBA and some of the other federal resources, our program's not going to preclude you from that. We're not going to ding you if you are going out for SBA funding. In fact, we would encourage it. So this really, again, is just short-term capital. So its definition is a little bit different. So it's companies that are 50 employees or less, and it's companies that have short-term cash flow needs. It is any type of industry. It is any type of small business. And so whether you're retail, restaurant, construction, dentist's office, at this juncture, we have just about everybody and every type of business that is applying for this loan. So the program will close today at noon. The application process is fairly streamlined, and we're just looking for people to come in, put in their applications. We're going to try and review all of that, the applications over the weekend. The program has been open since this last Tuesday. At last check, we had about 2,100 applications. We're going to try and get the money to go as far as we can. And so we'll try and review applications over the weekend, get them approved on Monday, Tuesday-ish, and then have money flowing next week. We want money actually out next week. And so if you're a small business, if you're worried about making rent, if you're worried about payroll, our money is not going to be huge dollars. It's not going to be the SBA numbers, and it's not meant to be. It's really meant to be that bridge, hence the name of the program, between now and when you can get some of those other dollars back in the bank, or best case scenario, the economy starts moving again. And so that's a little bit about the program. It's open to any for-profit business that has under 50 employees. The key criteria that we'll be looking at is what is the impact, the economy and community impact. Should your business, struggle and you have to lay people off, we're going to prioritize those businesses that really, really need the money to keep going, and also that need the money to get through the next few weeks, so that hopefully it doesn't have a disastrous impact on local communities. So that is our program. Be happy to take any questions.
Andy, you're muted, buddy.
Thanks, John. I'm still getting used to this too. So I was just thanking Ben and saying what a great partner GoEd has been through the years to Park City. And we certainly appreciate you stepping up big. Now we need this help. So I've got a whole bunch of questions I'd like to rattle through. What I'd like to do is read the question, and then whichever of our panelists would like to answer it, just please raise your hand and I'll call on you so we don't talk over each other. So the first question is, it just disappeared.
Andy, that could be because I've been typing answers to the questions.
Oh, okay. Yep.
That's where you're looking.
Yeah. So Jim, why don't you go ahead and answer that question for everybody? Because I think some others might have it. But the question was, when calculating payroll for the Paycheck Protection Program, how do we calculate J1, since there seems to be an exclusion for employees living outside of the U.S.?
That's a great question. And before I go into that, let me thank Ben for bringing up the landing page that everyone should go to look for resources, coronavirus.utah.gov. During my portion of the presentation, I failed to mention that we've built a rapid response team, a group of experts who are technically up to date on this information and can provide rapid assistance to answer those whatever questions you have about the PPP or the EIDL loans. You can send an inquiry directly through coronavirus.utah.gov//business. You just click the link that says federal resources, and there's a big button that says submit inquiry here, and you can do that. So know that that's available if your question doesn't get answered here. To your question, Andy, and to everyone else, there is a specific provision precluding wages, commissions, and any other payroll costs that go to any employees whose principal place of residence is outside the United States. So that means you can't include your J1 employees in the payroll calculation for the Paycheck Protection Program. You also can't include H-2A employees. So that's it's a provision that's there. I don't know what the intent is behind that, but I mean, clearly we want to keep jobs here and we want to keep people working, but that's for now you can't include those people, their wages, I should say, in your payroll calculations.
Okay, thank you, Jim. Some also questions related to the Paycheck Protection Program, also known as PPP. Some folks are having trouble reaching their banks, and or their banks say they can't process these today. So any helpful suggestions what they should do?
That's right. And banks have had so little time to process this. They're all trying to get ramped up for the flood of applications that are coming in. If your bank is saying we're not going to be able to accept applications today, my guess is because they want to make sure they can take care of everyone and get the most successful applications through as possible. That being said, you can apply through any SBA approved lender. You can find the SBA approved lender list on banks.utah.gov. Or maybe it's banks.utah.com. Check that for me. In any case, so you can apply through any SBA approved lender. What I've heard is that many banks won't open up applications till this afternoon. There was some guidance that was handed down late last night, and they're still trying to get through it. So check back with your bank in the afternoon. They could be ready by then. But if not, go to that SBA approved lender list, and you can start reaching out to banks and finding out who's going to be available the fastest.
Great. Let me move on to our next question here. Next question is from Terry, and she asked, with the Summit County order of shutdown, how do we bring our staff back before May 1, or do we just pay them to be at home?
I would just say you pay them to be at home. If they can't, if there's no work that they can do, then you can't bring them into work, but you should continue to pay them if you're going to get that PPP loan. And you want the forgiveness, then you're going to have to pay them to meet that kind of 75% level to get the maximum amount of forgiveness.
Okay. And John, did you want to add to that?
Yeah, I would agree and support what Jim's saying. I think, the impetus behind what the governor and GoEd are doing, trying to infuse capital quickly into the economy, and what the feds are doing, it's really in an effort to keep the economy going, try to keep people being paid, try to keep businesses normal, try to keep the whole structure up and running, as opposed to just shutting it down and have everybody collecting unemployment. And then I think, Andy, something that we can reinforce is, with the governor's Utah Leads economic resiliency plan, they're very much our experts in the room trying to see the future and be ready for the urgent phase that we're in, but the next steps in terms of stabilization and then recovery. But the stage we're in right now very much is about health and safety, and the idea that if we're not willing and capable of kind of shutting down in the short term, everybody believes in the longer term it's going to do more damage. And I know it's hard to look people in the eye locally and say, we need you to shut down, but we need people to respect the Summit County Health Order and the declarations of disaster, as unpopular as that sounds. And it's tough coming from the economic development guy, but I think I speak for Bill and I speak for Max, and to the broader degree the state. This is going to be something we're going to have to do so that we can come back stronger, faster in the short term.
Anyone else before we move on to the next question? I think this might be an easy one. This is from Monty, and it says, what triggers the 8-week window for PPP expenses?
When you receive the loan. The
Okay.
day you receive the loan, that's the start date.
The next question is from Julia, and she said, can you please speak to independent contractors that are self-employed and guides, and how the CARES Act may be used to help them?
That's a great question and an important question. If you employ 1099 contractors, you will not be able to include them in your payroll calculations. Those 1099 self-employed contractors will need to apply on their own for a PPP loan. There are provisions specific to them to help them to calculate their payroll costs and so that they can get a certain amount through the PPP. So what I would suggest is reach out to your independent contractors and let them know that they'll need to apply independently from you.
Okay. And is that the same for company owners? I know there's a lot of one-person guide services in town that are impacted by this and maybe feel a little bit in limbo.
Yep, that's right. If you're self-employed, there are provisions specific for you as well. You can receive a PPP loan.
Great. Max, jump in.
I just want to try and remind people that during this process of filing for unemployment, and maybe Jim or Ben can help me a little bit on this. This isn't a loan, but I understand that the unemployment benefits have been boosted to cover 100% of your most recent wage. So if you've received that kind of compensation, let's not create an issue where we're double dipping, because we've had that in the past where people have accidentally extended their unemployment into the time when they were partially employed by us. And so there could be a little overlap. And so for those workers or those employees and employers who are rehiring, make sure that those lines are clear, so that employers don't get in trouble. We don't bog down the system on the unemployment office, because it's already bogged down with 6 million plus applications last week. So just wanting to make sure that that water doesn't get muddied.
This question is a similar one to Terry's, but I'm going to ask it anyhow. Can you please speak to balance between bringing employees back to a restaurant, which are limited to minimal curbside service, and what to do with them?
Oh, like, should I actually bring my employees into my physical restaurant space?
Yeah, that's a hard one. Restaurants don't have much work you can do from home unless you're handling their accounting.
Yeah, that's right. And, I'm not an expert in your business. And so I would say you're in the best position of anyone to decide what the best way is to go about handling employees if you're rehiring them through the PPP. I think the idea here is that you can help your employees to ensure that they have the capital they need to get the essentials and to maintain their employment over time, so that when we do enter stabilization and recovery, you can ramp up more quickly, and you'll be able to get back to business as usual more quickly. So even if you don't pay everyone only for time in the restaurant, if there's other, I see what you're getting at now with the wages. I would say you can provide people wages even if they're not in the restaurant, and you're in the best position to figure out how to best do that.
Max.
We also have, there are holes in every program, and we're trying to provide for as many people as possible. Unfortunately, in the restaurant industry in Utah, their wage is pretty low, especially for a tipped employee. So trying to make up for that. And I can't remember if there was something in there where I think the way it works is what those employees have claimed on their tips in the past is represented in your payroll reports, and you can compensate them relative to that number rather than just the wage they were making at whatever, $3 an hour. So,
Max, I can confirm that you can include tips in the payroll calculation.
Okay, I'm going to move on to our next question, and hopefully I think this might be a good one for Ben or Bill or both, but this is from Angela, and it says, why are we prioritizing loans and putting businesses in the position of borrowing money with interest instead of pushing the governor and state unemployment agencies to roll out the expanded emergency unemployment benefits provided for in the CARES Act that would put an additional $600 per week into the hands of unemployed beneficiaries?
Yeah, I think it's a very good question. And just so everyone knows, I am seeing the questions. I'm trying to answer them on the live chat. For some reason, my computer's not letting me do so, but let me see if I can figure that out. But Mayor, to this question specifically, so the lag that we're seeing, and I think that's kind of at the heart of the question, is why wouldn't we just roll this out? Why wouldn't we get everything dialed in and just make sure that we're ready to go? And it's a very legitimate question. And so the reason it hasn't been is because as we saw in 2008 and 2009 with the ARA, the Stimulus Act then, these things as an idea, as in a concept, they percolate up through the public consciousness and awareness, and it's very, very good and healthy. They then take the next step towards legitimacy in terms of actually becoming statute, law, signed, by the president, which has happened at this point. But then there's the next phase. And I think everyone thinks, well, the president signed the bill. Why aren't we taking that into account yet? And so I guarantee you and promise you, as soon as it becomes available, and I know because we're in the back conversations here, as soon as we can, we will. From the state's perspective, the reality is we can't quite yet because the rules are still being written. A lot of this stuff is still being determined at the federal level. Whenever we bring money into or account for federal dollars within the state system, we have to go through a legislative process. Again, I think and can promise, just knowing we are going to do our part as quickly as is possible. So whatever is needed on the state side, whether it's unemployment insurance, whether it's getting more money out to small businesses, whether it's supporting and buoying up the unemployment insurance system here in the state, whatever we need to do to get that started and to get that rolling, we will do. What we're waiting on right now is just federal guidance, and there's a ton of federal guidance that's going to be needed. I don't want to put this back on the federal side and say, they're just taking their time. That's not what's going on. They are working around the clock trying to figure out what all of the rules are going to look like, what all of the rollout implementation, how you get money from A to B. All of these questions need to be answered, and they're trying to do it as, from what I see, I would genuinely attest that they're trying to do it as quickly as they can. And so it is a little bit of a lag. There's no question. When you're dealing with $2.2 trillion across who knows how many federal agencies, and then you're talking about distribution to 50 states and potentially 300 million constituents in the United States, it's just, it can be a burden. It's difficult. There's no question about that. So as soon as we can, we will go through whatever legislative processes we need to get that money accounted for and out. And then we will try and do whatever we can to keep it flowing. But that's the reason you're seeing a little bit of a delay, is just because we're waiting on further federal guidance. So,
thank you. Go ahead, Bill.
Andy, I think Ben answered that question very well, and I have to say I'm pretty amazed at how quickly things from a president's signature to having our banks today being able to process the PPP program is within about a 6-day time frame. I thought that's pretty amazing. And I also want to shout out to GoEd, because I mean that conversation from putting a bridge loan program out and actually implementing it was probably within 5 days in terms of their meetings on that. And then I think from a local level, I just wanted to add is that there's been a lot of discussion regarding local programs and could there be bridge loan programs from the local side, and in our conversations with both the city and the county in those things, there's been kind of a deliberate approach to that, because I think one of the things that the city and county recognizes is that while the federal government and the state government are stepping in and providing a lot of resources in a fast manner, I think we all realize that there's going to be things that are going to be down the pike on this. And they might be in the stabilization phase, or they might be in the recovery phase, where local programs can help. And so I applaud the local governments for being kind of diligent in terms of how they've approached this, and thinking about the fact that there may be needs that are not going to be met by the federal government and the state government in July this summer, that where the local government can step in.
Great. Thanks, Bill. Hey, an interesting question that's come in that I'm curious if our panelists have any thoughts on this, but there's been some frustration among businesses that that carry business interruption insurance. And pretty much across the board, no matter what policy you have, the insurance companies are saying no, that this is not considered a covered peril because it is not specifically listed. can anybody talk about, is there work being done? I know we've activated our lobbyists on both the state and the federal level to look at this, but can anybody talk about what their hearing's been done to address that, and whether there's any hope that these businesses that have been paying into a plan they thought would cover them for things like this will get some assistance?
Andy, real quick, reading articles, I know that's already in the litigation phases by a lot of companies, larger companies too, with the same issue. And I don't know exactly where that stands in Congress, but I have a feeling that this is going to be a hot topic.
Yeah, I agree. And just a little promo for next week. We're going to do this again on Friday. We're going to keep doing these weekly as long as there is interest in the community and questions to be had. But next week, we're going to try to bring in a couple of legal experts to talk about issues revolving around insurance, leases, and other challenges that come with this crisis. So we've got more questions coming in. As I read through these, perhaps Max, you could talk a little bit about the local task force and some of the things you're working on, and maybe some of the holes you think we'll be able to fill that aren't already being covered by the federal and state assistance.
Yeah, so the task force is meeting twice a week now. We're meeting Tuesdays and Thursdays, but we pushed this week to Friday. Our focus in the last week and a half has been on developing a plan that sort of mirrors the state plan for recovery. Right now we're in, there's a 3-phase process going on. We're in the urgent phase. There's a stabilization phase we're going over, and then a recovery phase. Between Jonathan Weidenhamer and Jeff Jones at the county, they've worked pretty hard to put together sort of our first draft of a plan on how to go through this whole process, starting right now and looking out God knows how long, because the main question everybody has is, when do these phases begin and end? So today we're going to try and sort of dial in on this plan that we have. It definitely caters to the county and the city, and we're trying to answer as many questions in there as we possibly can. It's nice that the questions have slowed down a little bit. Last week, it seemed like every hour or two, the answers were different from the morning to the afternoon. Now we're starting to see the flattening of that curve, at least, which is good. But maybe Jonathan can speak a little bit to how we got to where we are. We're obviously still in the urgent phase. We're trying to figure out what the stabilization phase is going to look like, and then how to best help our business community and help the community as a whole understand what that is and what the next steps are. So,
Bill, why don't you take a crack at that? I mean, I feel like Jeff Jones and my counterpart at the Summit County Economic Development Office are really, staff, and we're really trying to get behind you and your co-chairs, Becky Kearns, from Zions Bank, and Rob Sargent from Alpine Distilling. We're really here to support you as you help the local businesses. So why don't you lead it, and I'll try to fill in if I think I need to.
Sure, Jonathan, and also thanks to you and Jeff, and especially and Jenny Dearson, who's worked on that this week, and especially Rob and Becky. So as Max described, it's a 3-phase plan. We are only looking at the economic side of this. The county is also doing the same program with social and people, and headed up and working with Community Foundation. The health side of this plan as well, that's dealing with the Board of Health, and then government, looking at it from the city and county perspective as to services, taxes. What do they anticipate in these 3 phases as we move through? As both Max and Jonathan mentioned, the real challenge is the stabilization phase. It is that middle term where we, from all of the things that we're dealing with now and closures, what do the next steps look like? And we're making some recommendations in terms of that. But I would have to say that, you know, our recommendations that come out of this group are still, they have to be reflective of what's going on from the health side. And so we can say, you know, restaurants can have half the seating that they normally have, but we know that the problems with that are how do restaurants survive with half the seating of what they've been built for. Same thing with, I know people are looking at and saying, you know, when can I open my doors again? You know, that's going to be a directive that's going to come from the health department as to when we can do that. So we're trying to tee it up. We're trying to look at what we do from a marketing standpoint to try to drive customers in this stabilization phase. But we don't know exactly at this point what that looks like in terms of what we're going to be allowed to do, in terms of gathering, in terms of the number of people, all of those pieces. So I think, you know, we're following the state's guidelines on this in terms of their plan, looking at that first urgent phase of ending sometime, you know, in early summer. They give kind of a 10 to 14 week look at that. And then once we move into that stabilization phase of what does that look like? What are we allowed to do in order to make summer start to generate some profitability for businesses, getting people back to work. And I think both the city and the county do, I hear it loud and clear that they recognize that once we can get people back to work, that's when things start to work again. That's when we can move from that phase of what do we do for people for food, shelter, those types of things, and move into the best way to get this town back on its feet is for people to go to work. And so where those trigger points are, that's going to be, you know, we can say what we think they are, but it doesn't matter if the health department doesn't say that's when they are.
Well, I want to also just point out that within the task force, we have representatives from the Park City Restaurant Association, from the Lodging Association. We're trying to, and I'm on the restaurant board, so we're having conversations on the side about how do we use each other, come up with creative ways to continue doing business. There are some really good ideas being bounced around right now on how we can all work together so that we can provide services to the community that maybe weren't provided before. And so having those voices on the task force really helps dial in. It's not just a governmental process, right? I mean, we're taking advice from the local entrepreneurs specifically and trying to put them into this plan and figure out which phase fits which idea. And that's the point of having so many voices in the room. So I saw some really cool ideas coming across the line last night. Ginger Wicks is a part of both of those groups, and she's done a great job of sort of putting everybody together. We've incorporated HPCA, and now everybody in all three of those groups are getting the same updates. And so we're getting the best minds, and we're getting as many opinions as possible to, you know, to participate in making the plan represent the community's needs.
Thanks, Max. We've got a lot of little questions. I'm going to try to bust through. I know some of you have been answering those online, but I'd like to have them answered for the group because I imagine several have the same question. Casey had a good question for us. Many of our businesses had to do layoffs a couple of weeks ago, so those employees have already applied for unemployment. If the businesses now want to qualify for the payroll protection plan, do they need to go back to those employees and ask them to cancel their unemployment so they can rehire them?
Thanks, Andy. I'm looking into that right now. I can't speak to the unemployment side as well as I can speak to others. So before I give anyone any false information, I'd like to do a little bit more research. I can send the answer to you if you can push it out to everyone. I thought Max had a good answer related to this question earlier. Max, I don't know if you have anything to add there, but I'm looking through now and trying to find what the rules are regarding unemployment are.
So the unemployment office does they're pretty thorough in their investigations of people who are double dipping. And so you got to be really careful there are some ways where you can get partial coverage from unemployment and partially paid, but boy, that line is really fuzzy, and they err on the side of thinking that you're taking advantage of the system. So the best answer would be that if you want to rehire somebody, I would have a conversation with that employee about what they're getting from the unemployment side and what you can afford to pay them within the parameters of the new PPP or whatever loan you're taking out. So make sure that you figure out what's going to benefit that employee the most, work together with them. Since a lot of these people are restaurant industry people, there's probably a couple extra hours in every day to have that conversation. So I would say work with your employees specifically to figure out what's going to be best for them, because the ultimate goal with this is to make sure that the individuals on the street are benefiting the most. It's not about how to best take advantage to best take advantage of the system. It's how to benefit that person the most. So work with them and figure out the answer on your own.
Okay, I'm going to jump to the next question. This one's from Brian. It says, if we've already applied for the disaster loan assistance, would we need to apply for PPP as well? And will the disaster loan assistance be forgivable as well?
This is a great question. And Jonathan, I see here on the chat that you would like to answer this question live. If you don't mind, I can jump in and provide some of the initial information. And then, Jonathan, if you want to fill in with color, then please do. The disaster loan and the PPP can work together. So if there's a few different options here if you're a business owner. One, you can get a disaster loan and you can receive that $10,000 grant, which will be deducted from the total amount of the loan, but won't be required to be repaid. So that's one way you can go. If you want to get a disaster loan and a PPP loan, you can do that so long as you don't use those loans for the same purposes. So if you already have a disaster loan and you're using that to pay for payroll, then you can't use, you can apply for a PPP loan and you can receive it, but you can't use it for payroll. There's still some question as to how the SBA or how lenders are going to certify that you've done that. There's guidance that needs to come down the pipe, but know that that's something you can do. You can also refinance your disaster loan into a PPP loan if you receive the disaster loan before April 3rd. So know that that's a possibility. When you do that, the amount of the disaster loan will be added to the total amount of your PPP loan, so long as it doesn't exceed the $10 million loan cap. If you received the $10,000 grant in advance of getting that disaster loan, the $10,000 grant will be deducted from the amount you can be forgiven from the PPP loan. So a lot of different provisions here. Know that there's a couple different options available for you. You can either go with both, you can refinance, or you can go with just the disaster loan. And I can help anyone who has additional questions with the guidance there.
Thank you, Jim. John, do you care to add to that? Okay. I'm going to jump to our next question, and this is from Emily Means, our local reporter. So be careful what you say. It may end up on the radio. So what are the details and action items in the city and county's economic recovery plan? It seems the state's plan provides more of a framework or timeline for when we get back to business as usual, but not so much how we get there. That's a big question.
I'll jump on first on this one. I think that in the stabilization phase of the plan, and I've not seen the social or the government or the health side of this. I can only speak to the economic side, but there are assumptions that we are going to be in kind of a limbo position over the course of the summer. And those are still going to be directed by what the health department says we're allowed to do as businesses at that time. So some of the meat on the bones of that is talking about what businesses should be doing at that time, and then how they can do things. I've just really quickly looking at some of the things that in this phase where businesses that can be working on in terms of collaborating with other businesses, soliciting Google reviews on their businesses during this time, negotiating with suppliers is an important part about that. Enhancing your digital presence to do as business in as many ways as possible. Mastering your finances during this time frame. These are all things that we don't have to wait for anyone to tell business that they can do them. There are things that they can do right now. So that's kind of the some of the fastest things that we can be doing to get people. One, I'd like to do a shout out for PC gift cards. Great website. Businesses can put their gift card sales onto that site. It's very safe. All they're doing is linking to your site as a business. A great way for businesses to gather some upfront cash out of this and through that gift card program. So Jonathan, maybe you can share any other details on that plan you anticipate.
Thanks, Bill. I would just quickly add that we know this is going to be a dynamic and living document. There's a lot of things we can't predict, and we don't know when we're going to transition out of urgent and into stabilization. So the things we've talked about, the draft form that we're going to be shipping up to the people we work for at the city and the county council level is really about how can the government help, what's our role. Some of those things may be easy and intuitive, like reducing fees or licenses, applications, parking tickets, that kind of things. Other things are, does the government have a role in infusing capital into the local market? Can we be consumers? Can we purchase gift cards? Can we feed people? How can we help? Should we help? And then lastly, it's really having an understanding of who's open in the market right now. What types of businesses are actually open? Can we be a conduit to facilitate their success? And then what businesses, like real estate, have a huge part of our economy, but right now aren't considered to be essential? Can we get other sectors of our economy open and running and beginning to create revenue, and slowly just facilitating and supporting real action steps that people can see, touch, smell, and understand what our target is. So we're really working as a group on specific deliverables and action steps to infuse capital and open up more business when appropriate.
And I just want to make a general comment. I mean, this pandemic and the crisis, both human and economic, it's created is unprecedented. So there is no real playbook we can look to or predictor to know how long this is going to take. And, this could end up being like a major natural disaster, which is something that has a huge economic hit and a relatively quick recovery. It could also trigger a recession that digs a deep, dark hole for us. So I just urge all the businesses to steward their money and be patient and understand that probably in 6 weeks or so, we'll have a better idea where all this is headed, whether we're able to get in front of it and what we can start looking at for recovery. But right now, I would plan for the worst and hope for the best. And we're all just going to have to find our happy place. It's we get a little bit of practice with this every fall when we don't know if it's going to snow for winter and when it's going to snow and when businesses are going to kick in. This is a much larger version of it where we're just going to have to prepare for all circumstances. Max.
Yeah, Allison Kulo and I have been speaking a little bit about just trying to get as many businesses involved and as many business owners involved, most likely mid to late May, just to have a best practices conversation about what to expect, how to ramp up responsibly, and how to not put ourselves in really tight spot come November, not knowing what types of peaks and valleys we're going to have with this. So just trying to help each other make good decisions as we start gaining confidence that that we're moving from phase to phase, and having similar practices as we continue to go through the process.
And Mayor, my apologies. I've got to jump onto another call, but I'm giving a lot of these people my email address, and so that they can just ping me, and some of them already are, which I appreciate. And so we're getting connected into the right people. So if there's anything I can do, please let me know. Happy to help.
And thanks for joining us, and thanks for all you're doing. And we'll maybe have you back soon. So you stay healthy.
Thank you. Likewise.
I
one
also
last
need
question.
to jump off here. I apologize. Similarly, you can reach out to me at jporter@wtcutah.com, or you can go to coronavirus.utah.gov/business and submit an inquiry to the rapid response team. Thanks.
Jim, thanks so much for being here.
Yep.
We'll take one last question here and then let our panel wrap up. The last question is from John, who has restaurants in both Salt Lake and Park City and is wondering why Park City is restricting DoorDash where Salt Lake is not. And I will do my best to answer that question, which is really to say that that's a question for the Summit County Health Department. They want to reduce the number of people handling food and in contact with customers. So they have told us they have limited delivery. So I would recommend you reach out to them directly if you'd like to go into more detail there. And with that, I'll take final comments from any of our panelists.
Bill, just one kind of last comment is that we have a lot of great businesses in town, and that a lot of them have been around for a long time, and all the strengths that those businesses have had to be successful as they have been over that time, and the ability to figure things out will push us through to the finish line on this, and help us get to the next phases on this. I saw a quote the other day I thought was very appropriate, and said, "Our community depends on local business as much as our local business depends on the community." So I think everybody has an opportunity now to kind of reflect on their businesses and make the adjustments. And just like we experienced in other downturns, whether disaster or whether financial, we come out of it with new ideas. I was so encouraged the other day to see information coming out from businesses that were telling me that they were looking at their product mix. They're looking at ways they're going to change their business and improve their business when they come out of this. So I just want to compliment Andy and Max and Jonathan and Linda for putting this together today, because I think the resources that you were able to get from GoEd and from WTC is invaluable to our small businesses.
Thanks, Bill. Max or John, care to add?
I would just add, we've been very intentional as a group, focusing on small businesses and what the tools are and the economy. But prevalent through that conversation, our co-chairs Becky Kearns and Rob Sargent continue to remind us about the social and community aspects of what the small businesses do and the impact on the community. And like Bill said, it is really the community. And for Rob, it's really interesting to hear him continue to want to make sure there are other people going through what he's going through and what our small businesses are going through. That's been very, very prevalent and compelling. And sharing those stories and making sure we're all taking care of our mental health, I think is a really important thing. And make sure you're comparing notes.
Max?
Sorry, I'm just having some conversations on Facebook about some of our less represented folks when it comes to an official support network, right? So you have a lot of people from south of the border who live and work in Park City who don't actually fit into some of these things we've been talking about, and a lot of employers are asking questions about what to do about them. So I'm directing them to the Christian Center and to the Park City Foundation and some of those types of resources, so that they can get some answers for those families who are, sometimes forgotten.
Thanks, Max, and thanks for pointing that out. Today's topic was related to small business and relief efforts. That doesn't mean that we aren't deeply concerned about our workforce and the social needs in our community. And so I encourage anybody that'd like to talk about that more. We will have a general virtual cafe at 9 a.m. next Tuesday. We'll have 2 council members hosting that, and I encourage you to tune in and ask your questions. But we know there's some urgency, so feel free to reach out to City Council or myself at any time, and we're happy to take your questions, your ideas, and address them. And I just want to give a final thank you to our businesses. certainly we cherish our sense of community and our small town character here. And there are a lot of elements that go into it. We talk about the value of our residents. We talk about our historic character. We talk about our natural environment. But sometimes we forget our small businesses are a big part of what make us unique. And those small businesses are what allow many of us to live here. So we are here as your partners through this recovery. We know this is a difficult time. We wish you the best, and we hope we can help. So thanks for tuning in today.